Hi guys, this is Lee with the Market Sense for the week of December 10th, 2019. The charts in this presentation are provided to us by Gettess and come from their Trade Navigator software. This is a weekly bond market chart, and boy, it almost looks like all the gas just went out of the market, doesn't it? This is not terribly unusual. We're mid-December and the week of a Fed meeting. They really probably won't do much even after the Fed's done because I don't think the Fed's going to do anything. They'll announce Wednesday afternoon their position on interest rates. I think there'll be no change. I don't know if the statement will say anything. Probably not. Nothing major to jolt the market. Last week was an outside week. Those often halt a move. They like everybody spent all their bullets out and they're done. So we're just sort of going in between here. They are holding support around 157.19 here, which kind of is a little surprising. The more likely target would be down here at 156.12 or 13. So holding up here is, marginally good sign, but I say marginal because I really don't expect anything out of them this week. We've got potential resistance here at 158.26 and more up here above 160. Chances are good that they're not really going to break much of anything. If they do break the initial resistance here, I doubt they'll break the rest. I just expect them to kind of stay inside of this bar, if anything go a little lower, because that's where we thought the target was. But unless there's a big surprise from what the Fed says in their statement after they adjourn Wednesday afternoon, I just really don't expect this market to do much. Now in stocks, boy, I thought last week was really interesting. We made new highs first and then had a big breakdown. Of course, all this movement up, they had plenty of room to break. Never even got to where I thought they might. And then they turned and closed back up almost exactly where they opened. Now, when the market is closing like that, opening and closing in the same place, that's usually an indication of indecision and can preclude a breakout. However, with a huge bar like this, that's probably not the case this week. Wouldn't be real interested in going with breakouts here. And similar to the bonds, because of the Fed meeting and probable lack of action, I'm not sure we're really going to see much of anything, although if there is anything, I think you'd have to be a little biased to the upside. First of all, you've got the trend that's been this way, well, since March of 2009, but certainly for the last few weeks here. And then last week to break down that far and then recover it all, well, there certainly is a lot of buying pressure from someplace. The 31.25 area, the green line in the middle here, could act as support and seems to be acting as support. But even if they go down to the 30.92 area, nothing terrible there. In fact, I'd be interested in taking a look at them if they get there. The going up to 31.80, making new highs, very possible. I don't want to sell them if they get there, and again, I don't really like the idea of trying to break out that high. Last week's a little, you'd wind up with your breakout points just too doggone far apart to be realistic. I think you don't want to wait that long to get in. So. Gosh, there's just not a whole lot we can do here. Wait to see if there's anything exciting from the Fed, which I honestly do not expect. And otherwise, I guess we're on impeachment watch, right? So that's what we've got for you today. I hope you can find something profitable to get into.